Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex and today we're analyzing another stock that is great for long-term investors. If you're looking for a strong defensive position in a well-regulated industry, Fortis is definitely a company to consider. This stock is listed on both the New York Stock Exchange and the TSX under ticker symbol FTS. As Fortis is a utility, it is highly regulated. This combined with their assets provide them with a wide economic moat that will allow the company to be profitable for many years into the future. If you're unfamiliar with economic moats, I highly recommend that you take 5 minutes to watch my video explain the different types and the importance of economic moats. This will help you become a better investor and assist in screening companies prior to investing. If that interests you, click the pop-up on the screen now. If you enjoyed this video, please don't forget to like and share with your friends. It greatly helps the channel. Before we get into it, if you want to purchase Canadian stocks and pay $0 in fees, click the link in the description below to open your account with Wealthsimple and get $10 for free when you invest your first $100. Alright, now that's out of the way, let's have a close look at this dividend aristocrat. Fortis owns and operates 10 affiliated electric and gas operations that serve over 3.3 million customers in Canada, the United States, and the Caribbean. They are in 5 Canadian provinces, 9 US states, and 3 Caribbean countries. Across these 3 markets, we can see that the US dominates the majority of their assets, then Canada, and the Caribbean makes up a small 3%. Fortis has over $57 billion in assets. 93% of that being electricity poles, wires, and natural gas lines. They're focused on investment in transmission and distribution infrastructure to deliver energy from clean sources to their customers. Fortis is growing both organically and through acquisitions. The company has more than doubled its size with the successful acquisitions of US companies over the last 6 years. One thing I love about Fortis is their regulated revenues. Regulated utilities account for 99% of the corporation's assets, with the remainder primarily attributable to non-regulated energy infrastructure. This allows for more than 82% of their revenue to be derived from regulated sources. Fortis's earnings are mostly determined under the cost of service regulation with incentives of performance-based rate. The company is involved in many long-term partnerships and contracts, which allows transparency into the long-term development and growth of the company. A side measure is Fortis measures their electricity reliability and uses the average hours of interruption per customer served as an indicator of performance. In 2019, the average at Fortis was 1.84 hours, outperforming the Canadian and US combined industry average of 3.65 hours. I thought this was important to mention because as a consumer of electricity, the main thing that you want for it is it to work. And if it's down, it's completely useless. So to know Fortis has the network to be able to get these issues sorted quickly and reliably is a real competitive advantage over other competitors in the industry. Sliding on over to Fortis's stock quote, I'm going to run through a couple of key things here. If you do want to know more about stock quotes, I have made a video on how to read these. You can click the link on the screen now, and I'll also leave it in the description below. Alright, so Fortis. Today they closed at $52.78, down 53 cents or 0.99%. They have a market cap of $24.522 billion, a PE ratio of 19.85 over the trailing 12 months, and earnings per share of $2.66 Canadian. In the last year, they've traded anywhere between $41.52 and $59.28 Canadian, so they're sitting in about the middle of that range. And don't you worry, I did not forget about that dividend of $1.91 Canadian per share, which right now equates to 3.58%. Fortis has a very impressive dividend growth and history. They have seen 46 years of consecutive share dividend payment increases, and have also pledged to grow dividends annually on average by 6% all the way to 2024. Fortis is considered to be a dividend aristocrat, and we can see why. I think it's interesting to note here that even through the 2008 financial crisis, they've still managed to raise their dividend. To me, this shows that this company is able to weather the storm regardless of the overall market. This is why I consider it a very strong defensive position for anyone's portfolio. I also thought I would just add in this little section on share price history. From what we can see here, Fortis's total shareholder returns on an average is significant over the last 20 years, outperforming both the Utilities Index and the TSX Composite Index. Pole vaulting over to the share price versus fair value, Simply Wall Street is a great tool for all investors, and they offer an estimate on this based on the cash flows the company is expected to generate in the future. Their fair value estimate is $89.62 Canadian, meaning the stock is currently 40.5% undervalued based on this metric. As is tradition, I like to look at the price to book ratio, in which companies that are below 1 could be potentially viewed as undervalued, whereas those with a higher price to book ratio may be trading at a premium. Book value is just the value of an asset according to its balance sheet account balance. So that just pretty much means the value based on the original cost of the asset minus any depreciation. Looking at Fortis, they have a price to book ratio of 1.4, which is slightly higher than what we usually like to see, but it is good to see that the overall industry is at 1.8. To me, this tells me that Fortis is fairly valued or even potentially undervalued compared to its competitors. Next up, we have the recent insider trading. I feel like most investors tend to ignore this or not even look into it. I see it as someone who has a hell of a lot more information on the company than I do, sees what they're doing day to day, and has a very good understanding on the overall output and growth of the company. That being said, I put great importance on insider trading. Taking a look at Fortis, we can see that there's been a lot of insider trading recently. Those on the inside have been buying pretty frequently. We can see David Hutchdaddy, the Chief Operations Officer, going all in with over $500,000 just a few weeks ago. And we also see Chief Legal Officer James Read the Signs dropping a cheeky 50 grand here and there. Moving on, let's take a look at the financials. Not the most interesting thing to do, but definitely important to understand the overall health of the company and get a better idea of how they're growing. So the first good sign right here is total revenues has been growing over the past 3 years. And it's also great to see in the trailing 12 months that revenues has continued to grow despite the virus. This backs up my point previously of a defensive company that can withstand these kind of issues. So as expected, operating income has also been growing over the 3 years, and so has gross profits. So net income has been growing over the past 3 years. You may notice that in the trailing 12 months, this is down a little bit from the end of 2019. But that was due to 2019 where Fortis did sell off some of their assets, which has been accounted for in the other income section. This is nothing to worry about because this isn't everyday income and doesn't reflect on the performance of the company. So looking at the total current assets, they're sitting around $2.5 billion. And we can see that the total non-current assets has been growing over the past 4 years. This is primarily driven by the increase in property, plant, and equipment, which has been completed through the acquisitions of assets and also the creation of them. So overall, we have seen total assets grow over the last 4 years. Total current liabilities has been growing and now sits at over $4 billion, and total non-current assets has been growing as well. This is predominantly due to the long-term debt. However, electric utility companies like Fortis commonly do use debt without problems. Funding their assets is a very capital-intensive process, so it does not surprise me that they have fairly large long-term debt. Overall, the total liabilities has been growing over the last few years. So after looking at that, let's take a quick look at the debt-to-asset ratio. This just measures a company's assets that are financed by liabilities rather than its equity. So we get total liabilities of $33 billion, and we divide that by the total assets of $53 billion, and we get 0.623, which is slightly higher than we like to see. But in such a capital-intensive industry, this doesn't really surprise me. And as I mentioned previously, I do expect to see high levels of debt with a company like this. Finally, their cash flow statement, let's fly through this one. We can see that their cash flows from operating activities have been growing over the last 3 years. We can also see that they had been investing heavily, especially in the last 12 months. This is mainly due to investments in property, plants, and equipment. These are the kind of investment activities I like to see for a company that is growing their assets. Fortis is continuously paying off their debt. They have also been issuing a lot more common stock or more shares over the past 3 years, which I don't really like to see, because when a company issues additional shares of a stock, it can reduce the value of existing investors' shares and the proportion of their ownership in the company. It's not the most concerning thing, but it is something to be wary of, so do take note. And as expected, they have been paying out their dividend over the past 3 years. So looking at their cash flow in the trailing 12 months, that has been negative $1.2 billion, but that's predominantly due to their operating cash flow only being $2.8 billion, but they have spent $4 billion on capital expenditure. Again, I'll just make the same point that they are growing, they are continuing to invest in more assets and the maintenance of their current ones, so it does not surprise me to see this significant amount of capital expenditure. So heading over to the future plans, Fortis has an $18.8 billion 5-year capital plan for the period 2020 to 2024, and it's predominantly driven by grid modernization, delivering cleaner energies to customers, and the expansion of natural gas operations at Fortis BC. They're focused on rebuilding, reliability, resiliency, and system efficiencies, increased capacity, and circuit overloads. We've also noted that they're investing into diversifying their energy generation. Through the creation of wind farms, they're expanding into more ways to produce that energy. Next up is their Energy Impact Partners, or EIP for short. This is a strategic investment fund that brings together a global coalition of utilities and emerging technology companies that are shaping the future of the industry. Through EIP, Fortis has access to the latest innovations, positioning them to better serve their customers. An example of this is the collaboration started late 2019 that focuses on artificial intelligence to prioritize the replacement of higher risk electricity poles. This creates efficiencies and improves safety and reliability. Finally, Fortis is putting a big focus on sustainability. Currently, they're on track to reduce greenhouse gases by 30% by the year 2030 and are aiming to be completely exited from the coal industry by 2032. There's also been significant investment into the production and storage of wind and solar energy. I like to see this because overall society is pushing for a more sustainable future, and Fortis being such a big part of the lives of their customers is showing that they're corporately responsible by following suit. So finally, is Fortis a buy? I'm going to keep it short and simple. Yes, Fortis is a buy. You can't go wrong with a utility company. They're going to be here to stay. They're here for good. And with their current plans and future plans, I expect them to be profitable for many years to come. So let me know in the comments below, are you considering buying Fortis? Do you already own it? Is it a large position? And just remember that you can reduce the chances of a power outage by 18.3% if you hit that like button right now. That's all for today, folks. Remember to like, comment, and subscribe to see videos similar to this one.